It's Monday, the 11th of July, 2022. Welcome to the Fast Five by Fear and Greed, where we give you the top 5 business stories you need to know in just 5 minutes. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, 5 stories to rip through in 5 minutes. Let's jump into it. Story number 1, the relationship between Beijing and Canberra is improving, albeit slowly, with China's Foreign Minister Wang Yi saying Scott Morrison's coalition government was the cause of the breakdown.
Yes, he told Federal Foreign Affairs Minister Penny Wong at their meeting in Bali over the weekend that China was willing to re-examine and recalibrate the bilateral relationship between the two countries as long as it's based on mutual respect. Mr. Wang blamed the coalition's irresponsible words and deeds for the recent friction. Now, according to media reports, Beijing has a 4-point plan to improve the relationship. Mr. Wang wants Australia to treat China as a partner, not a rival. The two countries need to seek common ground. Australia must reject manipulation by a third party. That's code for the US. That one's going to be a bit tricky. And the fourth one, both countries need to build a public support featuring positiveness and pragmatism. We're not exactly best friends yet, Michael. There's still a long, long way to go, but things are going in the right direction. Everything China says needs to be critically examined, of course, but it's a long way from Beijing refusing to pick up the phone when the former government tried to ring them. We've now had meetings of senior ministers, former Prime Ministers Paul Keating and Malcolm Turnbull meeting China's envoy to Australia, and a lessening in demands from Beijing. The Albanese government is sticking to its demand for China to drop sanctions and tariffs before anything improves, but we are heading in the right direction at least.
Yeah, certainly are. Story number 2, Sean, we've talked a lot about the energy crisis lately, but this really kind of paints it in a pretty bleak light. There was a massive jump in wholesale electricity prices in the June quarter, costs up 7 times normal levels in some states. And of course, it's consumers that are footing the bill.
Sure is. Prices for wholesale power more than doubled last quarter to an average of $323 a megawatt hour in Queensland, easily the highest of any state in the past 2 decades. Nearly 7 times normal levels for the quarter. Incredible. Now, according to Energy Edge, as reported in the Financial Review, New South Wales wholesale prices are up 250%. South Australian prices are up 260%. These record high prices have been driven by coal and gas costs. It isn't actually the generators making more profits. In fact, some of them have cut profit guidance. It's the raw material costs which have gone through the roof. Smaller electricity retailers have gone out of business or suspended operations as a result. And of course, Michael, as you mentioned, it's we customers who are footing the bill.
Okay, on to story number 3, which also happens to be one of my favourite topics. The housing market, Sean, over the last few weeks seems to have thrown up a torrent of bad news for us. But there was a little good news over the weekend with auction clearance rates lifting off their 2-year lows.
We'll take anything at the moment. CoreLogic reported a preliminary clearance rate across the mainland capital cities last week of 59%. That was up from 55% the week before, which was the lowest since April 2020. Sydney, the country's largest market, rose to 58% from 53%. Melbourne came in at 59%, up from 57%. One thing though, agents in those 2 cities particularly have warned that there's a glut of unsold homes at the moment. That's triggered big discounts, and it just seems that the housing correction we're in the midst of at the moment is probably the largest in 40 years.
Okay, story number 4, Sean. BHP is obviously the largest listed company in Australia. Now, an English appeals court has given the green light for 200,000 Brazilian litigants to pursue a near $9 billion class action against the company.
Yes, it's around the 2015 Samarco dam disaster in which the collapse of a dam killed 19 people and poured about 40 million cubic metres of mining waste into communities, leaving hundreds homeless. The Court of Appeal in Britain overturned a ruling which went for BHP last year. It said if a trial went ahead, it could yield a real and legitimate advantage for the claimants that outweighs the disadvantage for the parties in terms of expenses. A few years back, a Brazilian class action awarded 20 billion Brazilian reals to claimants. That's about 5.6 billion Aussie dollars. This is on top of that one.
All right, on to the last one, Sean. Story number 5 today. Elon Musk's $44 billion proposed takeover of Twitter is over after the enigmatic business leader dropped his bid over the weekend.
We think it's over, but it might not be. Mr. Musk over the weekend said Twitter had made misleading representations over the number of spam bots on the service. Musk's team had concluded that Twitter can't verify its figures on spam accounts, he said, while Twitter last week said spam bots made up less than 5% of the social media service's total user base. The board of Twitter wants the deal to go ahead, though, and argues that Mr. Musk really can't just pull out. In fact, he's legally compelled to stick with his agreed-upon acquisition. This one's going to court.
And it will be fascinating. That's it, the top 5 business stories in 5 minutes. Thank you, Sean.
Thank you, Michael.
It's Monday, the 11th of July, 2022. Remember to hit follow on the podcast, and if 5 minutes isn't long enough for you, you can find our longer daily show called Fear and Greed. Wherever you listen to podcasts, it comes with a stack of interviews and things, including today's chat about investing in retailers. I'm Michael Thompson, and that was the Fast 5 by Fear and Greed. Have a great day.